Hi there. Thanks for stopping by the Equity Trust Virtual Classroom. My name is John Bowens, and in this segment, we're going to talk all about master leasing with a self-directed IRA, self-directed Roth IRA, self-directed 401k, or other tax-advantaged investment account. Now, this concept of master leasing has been around for many, many years, but you'll learn from an Equity Trust client in just a moment how she has created one of the very first blueprints for master leasing with a self-directed retirement plan. See, so many investors, including this particular investor, have come to me over the years and have said, John, I don't have hundreds of thousands of dollars in a retirement plan to go out and buy rental property or do fix and flip transactions, but I have enough money for a master lease agreement. And so you're going to learn how investors are taking control of real estate without actual ownership. And that's exactly what master leasing can afford to you. See, what master leasing is, for those of you that are brand new, is nothing more than renting a property from a landlord that no longer wants to deal with the tenants and the management and all of the other tasks that go along with managing rental properties. And they would prefer just to collect a monthly check for their rental income and have someone else handle all of the day-to-day activities. And so investors will enter into a master lease agreement with these individuals. And then this individual subleases that property to an end tenant occupant. And the investor that you're going to hear from in just a moment when I showcase her transaction is doing a minimum of a 1-month lease. And most of their tenants are staying for 3 to 6 months. So I'm not going to call this a short-term rental. This is not a long-term rental. It's more sort of in the middle. All right, so let's dive into this now that you understand the concept. And keep in mind that with an IRA, particularly a Roth IRA, which this investor is utilizing, you can create tax-free profits. And so as long as you follow all of the rules, when you withdraw the money from the Roth IRA, it's tax-free. I call this compounding interest in the absence of taxation. So investors all across the country are now finding ways to start parking their small dollar IRAs into real estate transactions that don't require a ton of money, but allow them to take control of real estate. So folks, let's dive right into it. Let me actually share with you the subject property. So this is a 2-bedroom, 1-bath house. It's in Twinsburg, Ohio. Although this is in Ohio, this strategy is working all across the country. The Equity Trust client, she used her Roth IRA to enter into a master lease agreement with the landlord. So this is a landlord that no longer wants to deal with the midnight telephone calls, no longer wants to deal with vacancies and leases and background checks and everything else that goes into managing rental property. But this individual does not want to sell the property, at least just yet. We'll refer to this landlord as an exhausted landlord. So here steps in the Equity Trust client with her Roth IRA. And this Equity Trust client with her Roth IRA negotiated with the landlord to rent this property for $1,000 a month with a $1,000 security deposit. They've agreed to, under the master lease agreement, to pay for all the furnishings, to furnish the house. They've agreed to pay for any expense under $100. They've agreed to take all the phone calls from the tenant occupant. They've agreed to oversee the property. The landlord is going to operate just as they've always operated, minus all of the headaches, all of the phone calls, again, all of the lease agreements, background checks, everything else involved in managing this property prior to the Equity Trust IRA investor stepping into this transaction. So here's what happens. Now that you see the property, you'll see it's fully furnished. Let's go over to the whiteboard here. Again, this is called a master lease. Master lease. And there is a master lease agreement. And this master lease agreement is signed by both the IRA account holder and the landlord. So the IRA, the asset of the IRA is a master lease agreement. So let's talk about the numbers here. The IRA makes a $1,000 security deposit made payable to the landlord. So money going out of the IRA is $1,000 for the security deposit. We then have $1,000 a month in rent. So the landlord is getting the same rental income that they were getting prior to this master lease arrangement. This will equate to $12,000 a year. So we're up to now $13,000 that the IRA has invested. Now this property has an appraised value of anywhere between $125,000 to $130,000. The IRA investor didn't have $125,000 to $130,000 to buy this property and then manage it as a rental, but you'll see they had enough for a master lease agreement. So they're up to $13,000. They had furnishings in the amount of $5,000. So you saw the pictures of the property. It was fully furnished. That's a key element to this master lease agreement. From there, they had $4,800 in miscellaneous expenses in year one. So let's look at the total cost to the IRA. IRA, $1,000 security deposit. IRA, $12,000 in year one rent. IRA pays $5,000 for all the furnishings. IRA pays about $4,800 in miscellaneous expenses. Remember, under the master lease agreement, the IRA holder is responsible for any expense under $100. So again, we don't want the landlord to have all the headaches, so we take that burden off of them. Anything over $100, we'll contact the landlord, and then we'll agree and maybe even work with our own contractors to take care of whatever we need to resolve. So the total cost, if we look at the total cost of this investment for the IRA, it's $22,800. So year one capital contribution, if you will, or capital investment is $22,800. The Roth IRA funded the entire $22,800. See, what you'll learn with self-directed IRAs is when an IRA owns an asset, the IRA has to pay for all the fix-up and repairs. The investor who has control of the IRA account holder, they can't personally pay for those expenses. So it's all coming from the IRA. On the master lease agreement, you'll see equity trust company custodian for the benefit of the client's name or their account number IRA. Right? So that's who's leasing the property. And then again, they're subleasing it. So $22,800 out the door for the investment. The property is being rented for $1,000 again. And then they turn around and rent it out for between $2,600 and $2,800 on a monthly basis. So they're making between $1,600 and $1,800 on the spread on a monthly basis. They're renting this property out for a minimum of 30 days, and they're getting tenants between 3 to 6 months. And these are back-to-back tenants. So you might be thinking, well, who's going to rent a property for 3 to 6 months? Well, let's think about it. With today's housing market, people are having trouble when they move from out of state finding housing. So they're looking for short-term housing. We're not talking 7, 14-day rentals. Again, we're talking minimum 1 month. They're looking for a place to stay between 1 to 2 to 3 to 6 months, and sometimes even upwards of a year on some of these master lease agreements. And they want a house that's fully furnished. Some of them took a short-term job position in a particular market, so they're not planning on staying there forever. They don't want to move all their belongings. They want a fully furnished unit that they can just move in ready, bring some of their stuff, and then leave when they want to leave. And they're taking good care of the property. So the landlord is happy because they're getting their monthly check, right? They're oftentimes aging landlords, exhausted landlords. They want their monthly check, they're getting it. And as the investor, as the investor with the IRA, I'm happy because I'm able to provide a really great service to the property owner. They get their $1,000 every month. I'm providing a really great service to the end tenant occupant because it's a fully furnished unit. The landlord's happy because I've improved the value of the property and I'm taking really good care of the property, and I'm making the profit into my IRA. And most importantly, in this example, it's a Roth IRA, so it's tax-free. The equity trust investor in this example is making tax-free profit. So how much is that profit in year one? Well, in year one, they made a gross rent of $31,200. So the gross rents coming in was $31,200. We had $22,800 on the investment, which means the principal came back to the IRA and they made $8,400 in profit. So on this particular transaction in year one, the Roth IRA grew from about $22,800 to over $30,000. All right. And the $8,400 in profit is all tax-free. Now, year one is a little bit more capital intensive because we have the furnishings. They had $5,000 in furnishings. But what about year two financials? Well, if we look at year two financials on this particular transaction, we have $15,200 in net operating profit, $15,200 back into the Roth IRA tax-free. So in year one, our entire investment was paid back. We made $8,400 in profit on top of that. In year two, our profit projection is $15,200. Now you can do the math for year three and year four, so on and so forth. Now there's just one property in this Roth IRA, one master lease agreement in this Roth IRA. Again, the IRA just takes control of the real estate, doesn't actually own it. What if they bought a second or a third or got a fourth online? Now they have multiple assets generating multiple streams of tax-free profit. This is how investors start growing maybe a smaller IRA in a meaningful way. Last but not least, the master lease agreement has a right of first refusal, which gives the investor the ability to buy that property at a future date. I'll also mention that some folks, instead of negotiating on a master lease agreement, they might use a lease option to purchase or some other type of creative financing strategy that they work out with the exhausted landlord that no longer wants to deal with managing property. I hope you enjoyed this session. I'll mention also that it's really important that you speak to your real estate attorney so that they can draft the master lease agreement properly or whatever other types of agreements or contracts that you have in place. So once again, here at Equity Trust Company from the virtual classroom, where we teach investors all throughout the country how to create wealth and preserve wealth, keep leveraging compounding interest in the absence of taxation. Check out our other YouTube videos. I hope you enjoyed master leasing with a self-directed Roth IRA to create tax-free profits for you, your family members, and other loved ones to come. Thank you so much.